Bitcoin is falling today. It just pierced yesterday's lows. The kicker here on Bitcoin is that
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Gareth Soloway dives into Bitcoin's technical analysis, sharing insights on price movements, key support levels, and future projections. Let's catch him up to explore his expert predictions and strategies.
again, as long as it holds 91,000 without confirming below, you keep that neutral to upside bias. But it is interesting. We are seeing some of the altcoins starting to come in hard. They got way overdone to the upside. And again, those are starting to crash back down just a little bit. We'll see what type of retrace they do, if they do a retrace that gives us a buying opportunity. But Bitcoin, again, nothing new here. Remember, you have your bigger parallel channel on the charts. High pivot from 2017 right through these highs. If it goes up to 107, 108 to 1,000, that would be your major resistance. And as long you favor that as the most probable outcome, as long as we don't confirm below 91,000. If we do confirm below 91,000, it opens floodgates to maybe go back to 74 to 75,000. But right now, bullish bias remains, even with it being down on the day. Gold today, a little bit of an uptick here. Notice the classic bear flag. If you've taken the winning trader series, you know you have a 1, 2, 3, 4, 5, 6 that's approaching a time count. So that tells us that if the bear flag is going to play out, it should start to play out as early as tomorrow on that key time count. If it does push up, any close above 27.15 would negate the bearishness and flip the bias back or the probability back to the bullish side. Silver, same thing. Silver is actually performing decently well today, up about 1.5%, but it's still mired in this support level here with a parallel right through here. And so again, if we do rally up, this will be resistance at 31.65 with technical support at 29.85. If 29.85 breaks, you're going down to basically 28 or just below. If this breaks to the upside, we could then start tracking back to the $35 level. But basically, at this point, you're stuck inside of this little range here, these two parallel lines, keeping price in check. All right, oil today actually getting a little bit of a bounce, not too big. In fact, here, if we go to the daily, there's your bounce on it. Right now, up about 99 cents. Still mired in this kind of lower level of volatility on oil as it looks for direction going into the Trump administration and the drill baby drill kind of atmosphere. And then natural gas right here, folks, down on the day again. If you're more aggressive than me, you might get a bounce off of this $3 to $3.05 level. I'm not going to play it because I just don't have enough upside bias for the risk that I'd be taking on. But again, folks, if we ever come back down to this 240-ish area right here, you can see a combination of support levels right through here. This area would be such a good technical level. Let me do a fib on that too. I always like to do my fibs from high to low. Yeah, look at that. See the fib, the 618 fib right there? It lines right up. This would be such a great buying opportunity if it comes back in, let's say in the next month, down into that 235 to 240 level for a technical bounce. Remember, the key is, guys, and this is really important, is that when you have a level on a chart, right? So a lot of times I'll just say, oh, this is a gap fill, it's going to be support. But if you really want to be that 80, 90% success rate trader or investor, you want to find multiple factors at a level. And right there on natural gas, we looked at a level where not only were there two trend lines that were converging, but there was a Fibonacci as well that increases your probabilities of success. And remember, that's what it's all about here, is just making sure that we put the probabilities as high as possible.
As Bitcoin consolidates below the $100,000 mark, the cryptocurrency market has entered a new phase of altcoin dominance. The total market capitalization has encountered resistance at $3.50 trillion twice this week, pulling back slightly to $3.46 trillion. Despite Bitcoin's inability to break through its psychological ceiling, altcoins have surged ahead, with the CoinMarketCap Altcoin Season Index climbing to an impressive 83 from just 23 a month ago. Among the standout performers is XRP, which has experienced an extraordinary rally, quadrupling in price over this period. Its market capitalization has now reached $150 billion, surpassing Tether's $150 and $35 billion, and Solana's $100 billion. After briefly surpassing its previous peak from early 2018, XRP has settled at $2.60, where it last traded 6 years ago. Analysts anticipate a correction at this level, but investor optimism remains fueled by hopes of regulatory clarity, a leadership shift at the SEC, and an expanded range of XRP-related ETF. While Bitcoin balances on major exchanges have reached historic lows, Ethereum is showing a bullish pattern reminiscent of Bitcoin's November rally. Institutional interest also remains strong, with MicroStrategy purchasing 15,400 BTC at an average price of $95,976, solidifying its position as a major corporate Bitcoin holder. As altcoins lead the charge, the market continues to display extreme greed and enthusiasm.
We're seeing that the markets, after closing yesterday, right in this range right here, right? Pretty quiet now. And again, sideways chop. Now, we were trending up a little bit going into the open today. We're still about 30 minutes away from that open. And then we did get a nice little sell candle right here. So let's watch and see. But ultimately, my point being is that there's not a lot of price action. If we look at where the markets have gone since yesterday after hours, it is pretty much sideways as all investors are waiting for the JOLTS data. Now, what is the JOLTS data, folks? All right, so we have JOLTS being reported, JOLTS, and that is job openings. So job openings data. Now, this is, again, going to be coming out at 10 a.m. today. It didn't used to be a huge number, but it's becoming more and more of a big economic number as we look to see how the labor market is doing. And ultimately, does this number give us a clue as to whether the Fed will cut rates in December in a couple of weeks, or will they stay on the sidelines? And what will they do next year as well? Now, we did have some Fed officials coming out and speaking yesterday, and they did guide us to believing the Fed is still on pace to cut rates in December, but then paused for multiple months into the new year to see what happens with tariffs, what happens with inflation. And by the way, we do know that inflation has become sticky, at least in the near term, as it's not going down to that 2% level anymore, instead kind of sticking around 2.5%. The question is, does it start to uptick just a little bit? Now, with the S&P, usually what I do is I go to the daily chart of the S&P. We're going to take it a little bit differently today because, again, there's just not much price movement. Instead, we're going to look at the bigger picture. I'm going to go to a chart here that shows the NASDAQ going back to the 2000s. And the reason I want to show you this is because, again, as a technician of the charts, you have to know the short-term picture, which is what we usually cover right at the open, kind of going into those opens. You know, what kind of levels are we looking for a breakdown or a breakout in? But we also want to see the bigger picture of the market. And honestly, it's a little scary. I'm not going to lie. Valuations were basically 2 standard deviations extended on the market from the normal trend. Again, that's a big deviation from what would be considered normal or safe in the markets. And this chart right here, the NASDAQ, looking at the logarithmic scale, look at the dot-com high right here. If you take that dot-com high and you connect it to the 2021 high, you have it right there. That extends out, and the NASDAQ, again, is bubbling right up against that high. Now, looking at the lower end, this is what's so crazy about this market, is that, you have these crises, right? The financial crisis, the COVID crisis, the bear market of 2022, and you would say, man, no one could have ever predicted, who knew how low they were going to go, but somehow the charts knew. And what do I mean by that? Well, very simply, if we take the financial crisis low here in 2009 and we connect it exactly to the low of COVID on the logarithmic chart, we can see that it gave us the exact low of the bear market in 2022. Using probability, using extrapolating that kind of idea, what does it tell us that we might be ready for in the NASDAQ 100? And that would be a correction back to that line. So again, notice how every time you bubble up against this line, we get a pullback of significance. And the idea being is that maybe right here, we are due for a pullback to the trend line, the lower end of the trend line.
XRP has experienced a meteoric rise, erasing years of losses within weeks and surging over 400% since Donald Trump's re-election. Currently trading at $2.50, its highest level since 2018, XRP has captured the market's attention. However, its ascent has also brought it into a historically precarious zone, a sell-off region that previously preceded market crashes of 85 to 95%. The parallels to XRP's 2017 bull run are striking. Back then, XRP broke out of a multi-year symmetrical triangle, skyrocketing from under $0.01 to a record $3.55. The current rally mirrors this pattern, having breached key Fibonacci retracement levels at $0.96, $1.46, and $2.25. If XRP can close above the 0.786 Fibonacci level at $2.82, a retest of its all-time high at $3.55 becomes increasingly likely, opening the door for price discovery. Analysts even suggest a potential climb to $5.64 or higher by mid-2025. While optimism dominates, caution persists. XRP trades in a zone associated with past bear markets, raising the possibility of a significant correction. Historical patterns show that after such parabolic rallies, extended downtrends often follow. Still, the combination of technical momentum and growing investor interest could propel XRP to new heights, potentially redefining its market narrative. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.